Right, welcome everybody. We're delighted to be joined by the senior management team of Benchmark Holdings again. They've just released a solid set of results covering the financial year to the end of September 2018. And we have with us Malcolm Pye, the CEO. We have Raeber, recently joined as the Chief Scientific Officer. And we have Mark Plampin, who is the CFO. Perhaps we can start with you, Malcolm.
Well, let's start with aquaculture because that's quite an exciting market. It's the fastest growing sector of the food industry today. As everybody will be very well aware, there is fast growing world population. There's a move to greater demand for protein. And there's also a move to healthy eating. And people know that eating fish is a key part of a healthy diet. And so those fundamentals, along with the growth of the a wealthier middle class in the southern hemisphere, which is a fish-eating, largely fish-eating cultures in the southern hemisphere, those big fundamentals have been driving the growth in aquaculture for a long time. And we see that projected forward for many years to come. And it's an exciting emerging market that Benchmark plays a very active and we hope a pivotal role in. Our work is around providing the technical solutions that allow these new species that are being cultivated to successfully be produced successfully and efficiently and in a sustainable manner. So we combine the biological disciplines of genetics, animal breeding, with advanced nutrition and with the animal health element, the managing disease. And disease is a critical factor in many of these species. You have to, before you can really culture them efficiently, you have to solve the disease challenge. And this is Benchmark's work. We bring together technology from the biotech arena, from other areas like human pharma, where there's lots of interesting new developments taking place. It's an exciting world of technology out there at the moment. And we draw those together, we adapt them, we do our own R&D and develop new techniques, new technologies to help the global aquaculture industry continue to develop.
Mm-hmm. And your clients are producing food.
Yes.
So you can see the benefits to them of more efficient production, better margins, and of course doing it in a sustainable way.
Exactly, and there is in the climate today, there is actually a strong move towards understanding what sustainable food production is. And when you're operating in a world where today, the world's surface is covered by 70% water, but it only produces 2 or 3% of our food, we can see that with the pressure there is to feed the world better and more sustainably, that this area is going to play a big part in the future development of the food industry. And so yes, this is our clients tend to be large food producing companies. Many of them are kind of the household names of fish production. And they're big shrimp producers, big salmon producers, and they're international companies, very modern food producing companies that are supplying the world, meeting this growth in demand.
And well, let's move on to results. And you must be very pleased with the growth across the board. You've got 3 core divisions, and they're all showing an upward trend.
Yes, our best results to date. So we are very pleased, and these results show development and progress with the company right across the board, as you say. We believe that we've come through a period of investment where we've been building the platform for the future, and we're now entering a period of organic growth where we can really drive the business forward, grow the business, and increase margins and drive shareholder returns with the assets, the basic assets that we've put together over the last 5 or 6 years. So we're at a very exciting point in our development. Our pipeline, which we've invested in, is starting to show some of the key, big products starting to get to the point where we can bring them to market. And again, that's a key point for Benchmark to in its development. We need to demonstrate the success with the R&D that's driving our pipeline. So we've arrived at that point which we predicted we would be at around now. So from the next 3 years, we expect to see very dynamic growth and big improvement in margins and returns. Mm-hmm. Well, technically, the production of aquatic species is quite technically challenging. Mankind has developed, and grown agriculture and livestock species, but when you come to start to do the same thing with aquatic species, there's some new challenges. These things obviously live in water, and they have larval stages very often. In the first instance, which are very hard to feed, they're hard to keep alive through those first developmental stages. They have a completely different set of diseases. So we are, in a way, we're innovating new tools to help the aquaculture industry tackle these fundamental problems and the fundamental triggers of success for them. What the Benchmark approach has been to look to develop sophisticated solutions to these problems. So we're very often exploiting synergies between those three core divisions. So for example, I'll give you a simple example. Many of the fish that we work with start to contract disease when they're pretty small, this size, maybe less than a gram in weight. And they have an immune system, but you can't vaccinate them at that size because if you stick a needle into them, you'll kill them. Mm-hmm. Whereas with the terrestrial species, even chickens, poultry, they're born big enough to be vaccinated with a needle. So we have to find other ways of delivering vaccines into them. And these are oral vaccines. These go in, therefore, with the early stage feed. So combining the early stage nutrition work of our nutrition division with the work of our animal health division, developing the antigens, the active ingredient in the vaccine, putting those together to create oral vaccines, is developing a really terrific synergy that our customers really need, and giving the possibility to prevent disease at an earlier stage. And there are many other examples like that where we can put together the technologies from our different divisions to create very powerful and sophisticated solutions for our customers.
Mm-hmm. Yeah, well, I'm sure Alex may dive a little deeper into the R&D pipeline, but let's move on to, I suppose, the commercial side of the pipeline, and now start looking forward and where you see further growth coming from within the existing business, because a lot of investment has been made in the year that you reported on increasing capacity in terms of egg and product offerings, and there's also been what looks to be a very significant joint venture announced. So maybe if you just want to drill into some of those growth opportunities.
Yes, so towards the end of last financial year, we completed the building of our new state-of-the-art salmon breeding facility in northern Norway. This actually we needed. We've been growing our business both through gaining market share and through the growth of the salmon industry itself as well. We were coming up to our capacity, so we needed to expand. And also, it gave us the capability to provide customers right up in the north of Norway with a really high quality product year round. It gave us the ability to supply salmon eggs year round. And this is something that the market really wanted, and it allows us to expand, and it's a big generator of growth and growth in profitability for the company going forward.
How much have you increased the capacity by?
About 75%.
So materially?
Yes, it's very material. At the same time, we brought together a JV in Chile. Chile is the second largest market for salmon after Norway. Here we didn't have such a strong position in the market, partly because we didn't have production facilities on the ground in Chile, and it's quite difficult to import into the Chilean market. So we launched a JV with the largest player in the Chilean market, Aqua Chile, on breeding again, and we're introducing the Benchmark technology, the genetics from the Benchmark programs into that JV to help drive it forward. And this is a powerful, again, an engine of growth for us in the salmon market, this time in the southern hemisphere in Chile. Yes, so we're in field trials in Norway at the moment with the new sea lice treatment. It's going very well. It's highly efficacious. 99% plus efficacy.
Downgraded from 100% 6 months ago. Then,
yes, it actually the figures haven't actually changed, but I think the lawyers have concluded that you can't say 100%. Yes, so we're seeing really stunning results from the sea lice treatment in these trials. It's being combined with the Clean Treat technology, which is in a way it's kind of the beginning of a new era in aquaculture, because with Clean Treat we're able, after we've treated the fish, we're able to remove the drug from the treatment water before anything is discharged back into the sea. So we can bring to an end the discharge of medicines into the environment, and that's quite an important step forward, I think, for the industry. Again, the Clean Treat system, we've been working hard on that over the last year, optimizing it, making it work at high volumes, which we need to do, and getting a lot of success with that. It completely efficacious. The water that's discharged takes the drug out completely. We can't detect the drug in the discharge water. So it's a really the trials are showing really good performance of the new technology.
What is the scale of the market or peak sales?
There's a market of something between 40 and 50 million for this. So it's a big product for us.
And will there be a gradual build up to that number?
Yes, it will take probably 2 or 3 years to build up to that number. Yeah,
2021, 2022
yes.
would be around that period.
Yep.
And in terms of other large opportunities, there's also a lot of development in vaccines.
Yeah, so we've been using very leading edge vaccine technology to develop these specialized vaccines for aquaculture that I was talking about. And the first of these is actually for Mediterranean species, so sea bass and bream this time. This gives us a new treatment for one of the prime diseases that affects those species and 2 of the secondary diseases. We expect that product to start field trials towards the end of this year, this financial year, or maybe just over the into the beginning of next financial year, the second half of 2019. And be coming along, and that's quite exciting. It's a relatively large market, again, up in the sort of 20, 30, 40 millions, again with a time, sort of 2-3 year build up. And coming along behind that, we have some more very new, exciting for us salmon vaccines. Again, are using new technology to crack difficult to solve problems for our customers. We expect to see those coming along maybe 8 to 12 months behind the Mediterranean vaccines.
Good. Well, that sounds very promising. Again, the scale of those revenues, peak product sales, relative to where you are now, is clearly material again.
Yes.
And what about not only the shape of the group in terms of providing products, but human personnel? I believe Benchmark now over 1,000 employees.
Yes, that's right.
So they need a lot of people to keep an eye on them.
Yep.
The board has also evolved
Yes.
quite a bit in the last year. New chairman?
Yes, Peter George joined us last year as our new chairman. Peter has a wealth of experience running large companies in the health sector in his case, but also he chairs and sits on the boards of a number of other companies. He brings a wealth of experience to the board and a very intense focus on clarifying strategy and driving the business forward. So the introduction of Peter to the board has been very positive, and we've also strengthened our exec team as well. We brought in Alex Raeber as our new Chief Scientific Officer. As the company grows, integrating our R&D programs and driving them forward has become a much bigger role, and Alex has joined us to lead that. And at the same time, we also brought in a new group marketing director, Dorte Lau, and she's long experience leading marketing programs in parallel large companies to ours, and are very experienced. And we see a big opportunity for really improving the way in which we take our products to market, sharpening the message, and also presenting the business and the technology that we have to our customers in a way that allows them to understand, exactly how big the opportunity is. So this, again, a very important role for us, drawing together our marketing teams and bringing a kind of central, one clear voice to Benchmark as it moves forward.
Right, and just to finish with, I hate to put words in your mouth, but I'm getting a very clear message that the prospects for Benchmark and the growth will come from organic growth. You've made a lot of acquisitions that are now knitted into place, but it seems like you are now more focused on making those assets sweat. Yes,
I mean, our period of building the infrastructure, the platform, which some of that was done through acquisition. I think that's come to an end now, and we're really very focused on delivering our key strategy around the new products and around creating the synergies and driving the existing core business forward as well, in a period of very significant organic growth over the next 5 years.
Great. Thank you, Malcolm.
Thank you.
Alex, welcome on board. Now, you have a very long and successful career in the industry that all of the investors will have read about when you joined the company. But maybe in your own words, you'd like to explain why you chose to join Benchmark and what excitement you see in your role going forward.
Absolutely, thanks, Andy. Yes, as said, I joined Benchmark in October, and I'm having a track record of 20 years in the animal health and in the genomics industry. In my last role, I was leading the global R&D for Thermo Fisher Scientific, and in that role, I was driving the innovation strategy and the commercialization pipeline for the last 4 years. And I believe that's really what made me ideally suited for that role in Benchmark, and what attracted me, of course, to Benchmark was its unique position in aquaculture, which is in the industry really an absolute a wonderful position to produce products from different angles: genetics, animal health, and nutrition. And what also, of course, was a big attraction was the large team of top scientists, like more than 100 scientists. Many of them own a PhD, and working together with that team to drive our product commercialization pipeline. That was really what excited me.
And it's a large team, but it's a large pipeline as well.
Yes, it is a large pipeline, and I'm really happy that in my first 3 months with Benchmark, I started to look at that pipeline with basically a cross-divisional team of our top R&D leaders, and we already started to streamline that pipeline. Looking at where do we have a focus and where do we want to push our core products, and we did that quite successfully. And we're going to move forward and doing that also in this year.
Which I'm sure Mark will point out, it's very important to know where you want to put the heavy expenditure as a product gets closer to commercialization and trials. So you're making these decisions relatively early in the process.
Exactly.
So we have roughly 50 products in the development stage at the moment. And Malcolm's already alluded to how they move through to the commercial stage, looking at the sea lice treatment trials that are ongoing at the moment. I know you've only been here a few months, but have there been any disappointments in the early stages of some of the new product developments?
Not really disappointments. I think where we can really focus more is on our top opportunities, where we see in the next 5 years potentially doubling our revenues. And we already mentioned, our next generation sea lice treatment. There are other opportunities which are on top of our agenda, and one of them is the shrimp genetics with our disease-resistant shrimp, where we are in the rollout in Asian markets, and then of course our vaccine portfolio, which is a very important R&D focus for the next years. And we are working on the commercialization of our sea BREAM and sea bass vaccines, and doing first commercial trials in the Mediterranean. And our salmon vaccine portfolio is also moving along and in the development, and we're looking into commercialization in the next 3 years.
Well, this has always been the thinking behind a portfolio approach. Malcolm has been mentioning some of the peak sale potential of some of these newer products, 40, 50 million. You don't need too many out of a portfolio of 50 to actually reach that stage to generate very handsome returns for shareholders.
Yes, absolutely.
And we keep saying a lot of technology, a lot of investment has gone into this research and development pipeline. How are you protecting that? Are patents an important part of that, or do you think you have unique know-how that competitors will struggle to?
Well, as you know, patenting is key to any innovation-driven company, and of course, also with Benchmark, we have a strong patent portfolio of like 240 patents in 28 families, and currently we have about 1/4 of our revenues are being protected by patents, granted patents. As we move forward, we're going to see increasing that, as we have a lot of patent applications in our portfolio.
You must have some pending at the moment as well.
We do have quite a number of pending patent applications, and we are looking into something like more than 1/3 of our revenues being protected by patents in like 2023. So that's really underpinning our growth strategy, and that a lot of our products in development are being protected by IP. In addition, we also have substantial know-how which we do not protect in IP, in patents. We are keeping that as trade secrets, and basically manufacturing know-how, which is essential to for us, because there's significant entry barriers for competitors, and we have this unique know-how, especially in our vaccine platform, and this is a big part of our IP strategy.
Yes, and then maybe just to finish, having recently joined, I'm sure you took a very close look at the competitive landscape of aquaculture companies. But given Benchmark is, I believe, market leader number one in genetics, it has a very significant position in nutrition, and is number one in the vaccine treatment and lice treatment as well. Is there any competitor out there that Benchmark should be worried about, or do you think that the sum of the various parts builds a very invulnerable position?
I think the unique position of Benchmark is really that we have those platforms in 3 different divisions, and of course we do have some competitors in each of those areas. But bringing together, our innovation platforms and creating synergies across our platforms, this is unique.
Not many other people can offer that breadth of service.
And there we can serve our customers specifically for, from a genetics perspective, or health or nutrition perspective, with products which no other company can really deliver.
Good. Well, best of luck in your role going forward. Look forward to seeing you again.
Excellent. Thanks a lot, Andy.
Right, welcome back, Mark. And you're smiling. You've got quite a lot of smile about looking at the numbers. Perhaps you'd like to pull out some of the highlights from your perspective.
Sure, yeah, thanks Andy. As Malcolm mentioned, a strong year of growth for us, and importantly, organic growth. So no acquisitions in this period or the prior period.
Before, yeah.
Indeed, yeah. So this is organic growth result that we're looking at, and I'll just talk a bit more about what has driven that. So we're very pleased to have reported this growth of 13% constant currency, and if you look, then we saw growth across all of our divisions. Importantly, the two larger divisions, nutrition and genetics, saw strong growth there on a constant currency basis, 9% and 21% respectively. And that's driven by this trend towards the newer products that we've launched in the recent past that are carrying more technology and therefore provide significant benefits to our customers, the producers.
And presumably cost more as well.
They do, exactly. This, you beat me to it. This is where I was going. Obviously, on a cost-benefit analysis, they're happy to pay a higher price for those products, which means that we achieve a greater gross margin. So a lot of that growth is driven by higher margin products, and actually that's on a divisional basis, but you look at it for the group, you see our gross margin has gone from 45% to 49%, and really that's what's underpinning that growth in gross margin. So we're really pleased that the products that have the higher technology on board have now started to drive the growth and therefore push margins up. And then if we look beyond that, further down the income statement, we have a clear focus on EBITDA, adjusted EBITDA margin. Here we've given this guidance that over a 3 to 5 year period we would be seeing that move to the mid 20% for the group as a whole. We achieved 11% for FY18, that's up from 7% the prior year, so very strong growth there. And importantly, the two larger divisions that I mentioned, nutrition and genetics, are almost achieving that mid-20s already. So nutrition, in fact, got there with 25% and genetics at 22%. So we feel that demonstrates clearly that in our industry,
it's a realistic target.
With our model, we can do that. We can achieve that for the group, absolutely. Another important point just to make is that we continue to invest in the pipeline of products that Malcolm and Alex in particular have talked about. So we did see our total investment there increase as expected, year on year up to 19 million from about 15 the year before. This reflects the fact that we've been heavily focused on those products that are nearer to market. We're really very focused on prioritising the final stages of development of those products. And the other thing to mention there is that that affects the mix between expensed and capitalised R&D. As a product for us moves into that last phase of field trials, we're compelled actually to capitalise the costs. So if you look at our new sea lice treatment, a lot of the investment in R&D in the year relates to that product. It's about £6 million of the 19, and all of that is capitalised. So that's why you see more capitalised and slightly less expense than the prior year.
Logical, yeah.
Yeah, indeed. And then with regard to net debt and cash flow, I know this is something that's of interest, and clearly that's something we look at very carefully ourselves as well. Here we did see net debt increase, broadly as expected, up to 55 million from 24 at the start of the year. And this is as a result of the investment phase that we've been going through, and in fact largely, certainly from the point of view of production capacity, completing during the financial year 2018. So there, the movement in net debt of around 35 million actually equates to the capex, the investment capex number that we see in the results. There we saw circa 20 million going into the final phases of our breeding and genetics production capacity expansion in Norway. And as I mentioned, we saw capitalised R&D increase up to about 7 million. So those two items together account for the majority of that investment in capex. The balance of about 5 million is more normalised maintenance capex. So that's the largest driver behind that. Within the mix, within cash flow, working capital, we did have an outflow to working capital. Some of that is one-off. It relates to some strategic decisions we made about resetting key raw material supply arrangements, and some related to key customer relationships. So there's about 5 million of the 14 million outflow to working capital that relates to those one-off items. They won't repeat. And of course we've been seeing some increase in inventory as a result of expanding our production capacity. So there's about 2 or 3 million in the mix there that relates to that. There'll be some of that coming in the next couple of years as those facilities get to peak production capacity, but on a long-term trend that's not a repeating item either.
And a very nice you for company forecasts, but whilst we're on free cash flow, that suggests a picture that in 2 or 3 years' time, and I'm sure analysts have this forecast, you will become cash flow positive.
Yeah, that's right. With capex and investment at a much lower level than we expect, or the analysts in fact have forecasts that show around FY21 we move to free cash flow generation. Yeah.
And once you're generating free cash flow, and we've already heard from Malcolm that the focus of the group is organic growth at the moment, so if there aren't large transactions to use cash on, it might be bolt-ons, but will you then presumably be deleveraging the balance sheet from that point forward?
Yeah, exactly, and that's what's shown in the analyst forecast. We do see some increase in net debt this year, which is coupled with their view that we will see a further significant increase in EBITDA, so that's helpful in the leverage. But then after that we see net debt reducing, and in fact from the end of FY21 onwards it could reduce quite substantially.
And the current covenant situation with your bank lenders?
Yeah. So at the year end the core bank covenant was set at a threshold of 3.25. Our reported number is 2.7, so we've got the half a turn of headroom, which is what I've referenced in the past. And in fact subsequent to the year end, two things have happened there. We've introduced a new bank to our banking syndicate, DNB. They're a specialist in aquaculture, and we're very keen to join our banking syndicate. That's right, yeah. And our existing banks were very happy to bring them in, which means we've then been able to access additional debt within that existing facility of £16 million to give us some extra liquidity. But at the same time also negotiate an increment in the threshold for leverage within the bank covenant, which just helps to ensure that we have got full access to that extra facility.
Good. And could we just look at a couple of specifics? Constant currency, you're reporting, perhaps just want to remind investors how important various currencies are, such as the dollar, because clearly 2018 was not the best period for the pound.
No.
Although it is ironic that as the Brexit situation gets perhaps closer to closure, there's been quite a decent recovery in the pound against the dollar just in the last couple of weeks, which not many people would have predicted. But could you just summarise which are the most important currencies?
Sure, yeah, well the dollar is the most important, and this is translational because of course we report in GBP, and here in fact a strengthening pound worsens our reported result. So it's interesting to note that on a constant currency basis our growth was higher than we reported because in 2017 the pound was relatively weak as a result of the Brexit vote. So we need to look very carefully at that currency, and of course we look for volatility going forwards. Other currencies that are important are that we report a lot of our salmon genetics business in Norwegian kroner or Icelandic kroner. So the translation back to the GBP again has an impact there. And within the group, euros have some part to play within OPEX, but it's less significant when it comes to constant currency.
And then perhaps finally from you, in terms of reporting the group, revenues have changed materially, the shape of the group has changed materially. You're highlighting a lot of adjusted numbers, which were particularly relevant at a time of significant acquisition. Is that reporting likely to change going forward?
Well, we're introducing this time out adjusted operating profit, so there is an additional adjusted measure there. We're looking at whether we perhaps drop next year adjusted EBITDA, and the reason for that is that we are now a more mature business. We've invested in our production capacity, so we feel that to look at a measure that is after deducting depreciation is more appropriate because that reflects the utilisation of those production assets. And we're also reporting again adjusted profit before tax, and the only adjustment there is for amortisation of acquired intangibles and exceptional items. So that's a relatively clean number, but I'm conscious that of course there's an interest in looking at the bottom line, the net result after tax, after taking account of that amortisation. And here we expect, based on analyst forecasts, that we'll move through to a profit at that clean line in the P&L around FY21 forward. So we will continue obviously to have some adjusted profit measures, but we're trying all of the time to make them the level of adjustment that much less.
Yes, well, bottom line is always the easiest one to look at,
It
and,
is,
and
yeah.
that is not long to wait.
Indeed.
Right, well, thank you very much. It does sound, from talking to all three of you, that there are powerful market drivers in terms of fish as a protein source. Aquaculture is a very important area of maximising returns for your clients who are producing those fish. And if you are seeing good growth towards those margin targets on top of expanding revenues, it should be an exciting future.
Absolutely, yeah. We repeat our guidance that 2 to 4 years out we'll be in this mid 20% EBITDA margin, and as we said, cash generative, and that's an important target for us to achieve. For this year, FY19, we've begun ahead of last year actually, and we're clear that we are on track to deliver in line with market expectations.
Yes, it was noticeable in the statement that you did mention a good start to the year, this current financial year already we had.
Yeah.
Well, long may it continue. Thank you to all of our presenters today, and you will have noted some of the slides that the team have been talking to. The full presentation deck is available on the Benchmark Investor Relations website, and there will also be a equity development research note in the near future to join the previously published notes. Thank you.